the headlines are kind of splashy. This is an unregulated space, the Wild West. But the truth of the matter is,
We hear about, stories people throwing away their cold wallets by accident.
people throw away like 1,000 Bitcoin is in some dump somewhere. That's a real thing. So we're early. So people who say that like, hey, I missed the run, I don't buy it. I think we're still quite early.
Welcome back to Assets and Taxes. I'm Kaelan Fitzpatrick. I'm a certified financial planner and financial consultant with Asset Strategy. Today we're diving into one of the most talked about and often misunderstood areas of finance, crypto and digital assets. But we're not going in alone. I'm joined by someone who brings a deep legal and regulatory lens to this space. Joe Dahl, General Counsel at Magic Eden, the largest NFT marketplace in the world and largest Bitcoin application in the world. Joe's appeared on major platforms like NASDAQ Trade Talks, Schwab Network, FinTech TV, CNBC, where he breaks down everything regarding crypto policy and regulation. Today, we're going to be diving deep into crypto regulations. There's some timely updates here. We want to discuss the different types of people holding digital assets and talk to you all about some cool concepts and strategies we see coming out with some of these updates here. Joe, it's great to have you on today. I want to start with this. What exactly does a general counsel at a company like Magic Eden do? I know this is not your typical space and typical workload for a general counsel, so would love to start there and kick things off with you.
Yeah, it's great to be on, Kaylin. It's gonna be a fun chat. So Magic Eden, one of the largest Web3 companies in the planet. As general counsel, I oversee all sorts of things. We're lucky enough to have an administration now that's a lot more pro crypto. So it's less of sort of dodging regulatory inquiries and more of, how can we innovate in a way that's responsible and aligns with, the laws and regulations that have sort of historically been set in place, while also help shaping the laws and regulations that go forward. There's a lot of regulations that are coming up in the United States, which is very exciting to see the U.S. sort of be the flag bearer for the future of this industry, which I think is a very disruptive one and sort of the future of finance. So we sort of participate in that process, which has been very rewarding.
I love it. And when we talk about regulation in crypto, I know there's some misconceptions about that. It's a very fast-moving space, and we've heard it actually being called unregulated at some points in time. Is there a misconception about it truly being unregulated, or is there just not enough regulation there for us to continue moving forward here?
Yeah, it's a wild moniker because the headlines are kind of splashy. This is an unregulated space, the Wild West. But the truth of the matter is that there's basically two approaches. There's no direct legal framework for a lot of the things that we're doing in crypto. So as an attorney in the space, you can take two approaches to that. You can say, hey, none of the rules apply, Wild West. And people do that. And that's really unfortunate because it paints the whole industry in sort of a negative light. Or as the sort of good practitioners in the space do, you say, we have to assume everything applies. So we have to assume that the 33 and 34 Act applies, securities laws. The Commodities Exchange Act, those rules apply. The Bank Secrecy Act, those kind of rules apply. And any sort of like tax-related codes, those all apply. So rather than saying like, hey, we have clear road of the clear rules of the road, clear legislation, it's like, well, because we're not sure which apply, we have to assume all apply and be hyper compliant with each one of these regimes. So when people say like, hey, there's no rules, there's no regulations, I'm always like, if you're doing the job right, it's actually much worse. It's actually much more onerous in most industries because you're applying with everyone because you're not sure which one will be applicable. Hopefully this will change. In front of Congress right now was the Genius Act, which is a stablecoin bill. That's hopefully there's a vote going out Monday. Knock on wood that gets passed. There's going to also be a market structure bill. Now you have Bo Hines, the White House crypto policy director, who's like really like kind of beating the drum that's will be done before the August recess. That seems unlikely, frankly, because the underlying derivative bill for that Fit 21 is great, but needs a lot of work. And right now, Congress, per usual, is not super productive. So August recess seems a little ambitious. Maybe Q4 we get market structure. But honestly, I think it'll go in 2026. And why that's important is that sets up all the rules of the road for exchanges, broker dealers, all these custody, really major fundamental infrastructure issues. So that's going to be a real sort of tailwind once that gets through to just industry adoption and asset adoption as well.
Very, very exciting. And I love when I get to see kind of the lines starting to be blended, or at least thought about how to do that between where I typically reside, which is, in something we call TradFi, typical traditional finance, stocks and bonds, wealth managers. But there's also this budding development within the crypto space of that happening as well with things like crypto hedge funds. And obviously I'm accustomed to the regulations through SEC, FINRA, CFP board. You guys obviously will have to abide by that, but also, and I love this word you used before, you're in a way a frontiersman here, breaking new ground and treading into uncreated territory in the regulation space, and you yourself are at the forefront of that. One additional question I had here, at this specific point in time, I know there was some issues with our previous SEC chairman um, surrounding just the crypto industry as a whole. With the change of administration here, where do you see the SEC currently stands on crypto? And I guess what should investors know about that who might not be kind of studying the updates that are coming out here?
Yeah, that's a great question. So, a little history. Two chairmen ago, we had Jay Clayton, who's a Trump first term appointee. And frankly, he did a pretty solid job. Provided some guidance, did enforcement actions, famously brought the Ripple case on his last day in office. But Jay was great. Tough but sort of constructive, somebody you could work with. Gary Gensler came in under the Biden administration, and you know there was a lot of. I remember when it happened, and I think Bitcoin like spiked 20% in price, or something like that, because people were very bullish, frankly, on him joining. He was a professor at MIT who taught blockchain classes. He had a lot of statements saying that, hey, these are not securities, that these are a novel type of asset class, which frankly they are. Um, and then sort of got into the chair role of the SEC, and it became quickly apparent that there's sort of a different agenda here. So just for a little extra context, because there is not really a clear regulatory regime that encompasses crypto, and there's new asset class, we're not sure where to fit them in. Is this a commodity, a security? That classification is really determinative of a couple things. Which regulatory agency, CFTC, SEC, respectively, will have jurisdiction over these things, and which ones agencies will have the corresponding federal budget to go after these kind of things. So you had essentially like a turf war, for lack of a better term, between these agencies where they said, hey, well, we think it's our right to be regulating the space. So we will sort of articulate that by bringing enforcement actions against people in the industry and claiming ground, putting a stake in the ground saying, this kind of activity is regulated by us, and these are enforcement actions against these companies. And the collateral damage in this turf war was the industry, right? Industry players were sort of on the lookout for actions from both agencies at any given time. There was like moving goalposts, guidance was revoked and it's not really followed, and it was sort of this regulation by enforcement era. And we can get deeper into the politics behind it, but really that was is endemic or symptomatic of a sort of broader, heavy regulatory focus of the prior administration that really wasn't based in common sense. The new administration has really walked that back, and they've recognized that, hey, this is a novel asset class. Howie's great, the Howie test, investment of profits, efforts of others, common enterprise, right, passive, these kind of things. It's a helpful framework, but it's meant to be for like low liquidity assets. It's not meant to be for things that are doing, billions of dollars of volume daily. So it doesn't really quite fit. This is truly a novel asset class. And a lot of the rules, particularly the 33 Act and 34 Act rules, they kind of start breaking down or not really applying very well with respect to these new assets. And then the new, SEC administration with now Commissioner Paul Atkins, our chair Paul Atkins, and Commissioner Peirce, who's sort of the head of the crypto task force, have just been fantastic. Commissioner Peirce, especially, she's been, she wrote the Safe Harbor, gosh, 6, 7 years now, I think 2018. So 7 years now. That basically laid out a framework for a regulatory approach for the industry. To have her, someone who really truly understands the technology, the stage in which the technology is from development, innovation, and adoption perspectives, which means like, hey, we need some air in the room to let this technology grow. Because we don't grow it here, China's going to be all over it, right?
And you make some very great points here as well, particularly with regulation being slow and there just being different opinions to it. And simply just having a framework as a guideline of how do we need to build this? What are the things that we need to be considering? I don't know if we can quite consider it a debate anymore, but a lot of what we've seen with this regulation holdup, if you will, is it may have actually slowed down the adoption curve a little bit. And as someone at the forefront of this as well, I'd love to ask you one maybe this is a rumor, but one thing I've heard is actually overseas in Europe has more advanced regulations than we do in the United States. Is there any truth to that statement at the moment?
Yeah, so Europe passed MiCA, the Markets Infrastructure and Crypto Assets Regulations. I think that's the right acronym. There's this famous saying that goes kind of historically, Europe regulates first and the US regulates right. So, MiCA has sort of a number of sort of issues with it. I think a lot of people in the industry are having a hard time abiding by some of the rules because they're not I don't want to say they're not well thought out. They were well thought out, but they're a bit early. Like I said, this space is incredibly nascent. It's very dynamic. Things are changing daily. This is the most competitive space in the world. It's 24/7, 365. There's no like 5 p.m. the market's closed down. This thing is going. And it's all built on open source technology. And what's that mean? It means that if I create a new type of, asset app thing, right, in crypto, I open source it, meaning I let anyone in the world copy and paste it and create the exact same thing. And in that world, it really breeds a hyper competitive space because you can have this great asset, this great platform, and someone can click and paste your copy and paste your code onto the exact same thing in less than a day. So you really have to be constantly focusing on providing the best experience for your users to really stay ahead. And in that kind of space, things move very rapidly. So to sort of have like a very prescriptive regulatory approach, which MiCA is, it's incredibly prescriptive and less sort of like theme based or sort of like a large guideline based. Um, it's not a super helpful framework for the industry at the moment. But the U.S., to its credit, is trying to really step into this. New administration is really taking a thoughtful approach to it. I think they understand what it's going to take to make the U.S. the digital capital of the world.
I love it. And I maybe in my own opinion, but also what we've seen to start the year here is, this new bull run might not have taken off as quickly or as far as a lot of people have thought just yet. And I've just through my own conversations and even our conversations outside of this meeting, it might have to do with that regulation and whether it's individual investors or more institutions not feeling confident enough to either build new products or put more money in without knowing the direction that the whole industry is going to go in just yet. And in terms of the adoption curve we've seen so far, I'd love to just touch on the types of people that we see who've, not only been those frontiersmen and the very early adopters, but also people that maybe feel like they might have missed the bull run and missed the opportunity in crypto so far. But I don't think that people have necessarily missed the opportunity. We might actually just be on the forefront. So if you can speak towards that, that would be fantastic. Because I know there's not only the adoption curve, but there's also almost a bell curve with the types of people and when they're getting into this new space here.
Yeah, I think that's right. I mean, we constantly say in the industry, we're like 1994, 1995 in the internet. It's still very early. It's still, and it's early because it's very clunky to use. It's difficult to use. If you ask your average person, hey, can you go online and use a crypto trading application? They're like, how do I do that? I have to download a wallet. I have to put, cash into crypto and then I have to transfer it around. It's very difficult. And these kind of things we know, these are very strong indicators that we're very early on in sort of the adoption cycle. Um, which has pros and cons. The cons I think are that, we have some ways to go and we have some bugs to work out. The industry's all kind of working on that. The pros there is that there's opportunity, right? If it was easy, I think we'd already have price maturation and things would sort of the upside would be relatively capped. But because it is early, because there is more risk associated with a nation industry, the upside is greater. And that's just sort of like a standard thing for any asset class or any industry. So I think I generally agree with that. I mean, right, we always debate like where are we? I think the advent of the ETPs, for example, the IBIT ETF, really kind of moved the needle and said like, hey, like now there's a lot more exposure to this. We've seen billions and billions. It's the most successful ETP in history, even more successful than gold, which is pretty wild. I think that that has kind of moved us past this like very early adopter stage to kind of like the early majority stage. Um, and when you have things like the stablecoin bill go through, that's just this genius act being voted on. That's going to basically unleash the ability for money market funds, which is, 10, $13 trillion asset class to come on chain pretty rapidly. The kind of innovation that can happen when you're on chain, we're going to see products that will generate yield in ways that has never been thought of before. So the kind of financial
I
is,
just through my own conversations, I've seen people who are exploring actually tokenizing different floors of malls based on which floor makes the most yield and most money. Something that, might not have ever even been a thought in our mind, 5 to 10 years ago.
yeah. So we're early. So people who say that like, hey, I missed the run, I don't buy it. I think we're still quite early.
And there's obviously a lot of risk involved with any type of investment, but I think people hold crypto to be one of the most risky, not only the most volatile, but also maybe digitally the most risky because they don't know how to protect themselves. And protection is a very important part of crypto. I guess from your personal legal perspective here, what are some of the biggest mistakes that you see people actually making when trying to integrate crypto into their financial life? Because I know there's not only different ways that you can invest in crypto, traditionally through the ETPs, IBIT is obviously a very popular one. But you can also go DeFi, you can go on crypto exchanges, you can trade through a brokerage firm like Fidelity and own things like Bitcoin, Ethereum, or XRP. So when we think about all these different options and maybe people not having simply the tech skills in some instances for how to buy this, can you talk through some of the risks or just things people should be aware of for how they can just keep their money safe and protected here?
Yeah, that's a really good point. Like there's different classes of users, right? I mean, we did 75 million in revenue last year. We're profitable, but those group of people are a very small group of folks, right? Most people are brand new to the space. They don't understand how to hold crypto wallets because it takes a long time. I mean, it took me a while. I've been in the space for a long time, but I remember initially it really is a hurdle to get over that learning curve. Um, so, there's different ways to do it. Traditionally, people have done this thing called self-custody. The beautiful thing about crypto is that, so say you have yeah, a Bitcoin, right? Good for you. That's a lot of money. But the beautiful thing about crypto is that you can hold that yourself. It's like holding a bearer asset or holding a bar of gold. And no one can really take that from you unless they forcibly seize it from you or have some sort of legal means to do so. Um, and that's really powerful because you avoid counterparty risk, things like bank runs, systemic risks in the financial system, stuff like that basically goes away. And that even sort of the benefits of that multiply when you look at this as a fixed supply asset, when you have a global M2 supply, which is the global money supply, increasing pretty dramatically, and no signs of stopping there. Um, so these are all great things. But the thing about holding it yourself is that it's difficult. The user experience is tough for people to kind of figure out. So, you know, uh, private keys can be, you can basically lose these assets. God forbid there could be security concerns where, you could be robbed and someone could take this from you. So a lot of people are checking out having, trusted financial institutions, advisors basically hold these assets for you. So this is sort of like, early crypto people would never do this kind of thing because they're very sort of like philosophically aligned with like self-custody, holding their own assets. But the rest of us are kind of like, hey, it's inconvenient for me to hold this whole thing. It's confusing because my little device I hold it on, it needs updated, and I don't know if that update's going to like lose my money or whatever. It's kind of scary because what if I lose this, right? There's a lot of user error where people just lose their crypto. For
Well,
example,
we
like
hear about, stories people throwing away their cold wallets by accident.
oh, it's crazy. People throw away like, 1,000 Bitcoin is in some dump somewhere because some guy threw out his the wrong piece of paper. It's stuff like that. Like that's a real thing. So you see a lot of people sort of looking to trusted third parties to kind of help them with this.
One thing that we talk about specifically in my industry and in wealth management is estate planning and how do we transfer our assets to our heirs or things like charity, for example? How do we help the next generation? Um, we may have seen bits and pieces of that, maybe not the full flow of what we will experience in 20 or 30 or 40 years with crypto assets being passed on. Can you talk through some of the reasoning of why to protect yourself, why to record keep appropriately for the benefit of your heirs in an estate planning lens there.
Yeah, I mean, if you're this is a great point. If you're self-custodying, if you're owning the asset yourself, similar to like a bearer asset, if you don't hand that off appropriately when you pass or whatever, it won't be handed off. You'll lose those assets. And that happens all the time. So it's really important if you are self-custodying to work with a trusted third party who has experience with estate planning in the space to sort of make sure that these assets are handed down appropriately.
Sure.
That's critical. Can't underscore that enough.
And so the most important piece is access to the wallet keys. Someone can certainly leave behind a cold wallet. Maybe they can leave behind a hot wallet as well. I'd say cold wallet is probably going to be the most common as people start to learn about these different forms of protection and levels of security. So I guess in essence, someone could die and leave behind their cold wallet, but if their heirs don't have the keys to that wallet, they actually inherited nothing but the hardware itself and not the tokens within it. Is that kind of the way to think about things there?
Yeah, that's
There's
right. And we can make it a little more tangible for folks. A hard wallet is just it's like a wallet you store your cash in. But in this world, you take your Bitcoin, you put it on basically like a thumb drive, like an old-fashioned thumb drive, right? A little metal thumb drive, and you type in a secret phrase. And that secret phrase basically says you can now access the Bitcoin on that hard drive. That secret phrase is your private key. We're talking about private keys. It's just like a sequence of 6 to 8 random words or more. You can make it as complicated as you want. But if you hand down that hard drive to, a loved one right after you pass, but they don't know that secret phrase, it's basically like handing them a stick of glue. There's nothing in there. They can't get anything from
I'm sure people would not enjoy it, receiving a stick of glue versus a few
it.
Bitcoin.
Yeah.
Um, well, Joe, this has been extremely valuable and extremely helpful as always, as we not only educate our own viewers, but also yours as well. As we inch closer and closer to the blending of lines between TradFi and DeFi, or in other words, traditional wealth management and the digital asset or crypto world. Very excited to see the possibilities that come out and absolutely ecstatic that you're a partner of Asset Strategies here as well. I guess for our listeners that may want to learn more about you, the work that you're doing, and maybe even just Magic Eden in general, what's the best places for them to go? How do they get in touch? Anything that you recommend they check out first? You guys have a lot going on here.
Yeah, thanks. Our website is Magic Eden, like the Garden of Eden, .us, like the United States. So magiceden.us, that's our website. I can be found on Twitter at ShoeDog, which is a Phil Knight Nike book. The first O is a zero. And yeah, come check us out. Magic Eden's largest NFT platform in the world. We were the fastest unicorn in history. We got to a $1.6 billion valuation in about 7 months. And we think that just like the internet age, a bunch of companies were really trying to make it and be the internet companies. There's a whole bunch of us. Some of them actually made it. Some of them were the Amazons, the Microsofts, and we feel like pretty strongly that we're sort of a front runner for one of those spots.
I love it. I think you guys are putting your best foot forward in the space here, and you're making it easily accessible to all that be here. Hoping to see Emmy around more, your mascot with Magic Eden there. But thank you again for your time, Joe. Hoping to get you on again soon. If you want our help understanding crypto, incorporating cryptocurrency into your portfolio, or help managing the taxes associated with your crypto holdings, book a 15-minute discovery call with us. We'd love to help. We'll see you all in the next episode of Assets and Taxes.